Caroline Bowler, welcome to The Business.
Thank you very much for having me.
Firstly, on El Salvador going mainstream with Bitcoin overnight, what impact do you think this will have on cryptocurrencies more generally?
Well, I think with this decision by El Salvador, it certainly really brings into sharp relief the use case for cryptocurrency, not just for Bitcoin, as you say, but for other cryptocurrencies. I think it will help have crypto be taken a little bit more seriously by those at intergovernment level and as well as just at national level. I know for here in Australia, there's a lot of interest and a lot of talk at the moment with regards to cryptocurrency, particularly around its regulation. And so it'd be interesting to see how the El Salvador experiment pans out.
So Caroline, if the El Salvador example fails, does that mean that the adoption and evolution of cryptos will fail?
No, I think that's probably a bit of a broad brush to stroke there. I think that El Salvador is one small country that is under economic pressure and is trying its best to find its way through, and they're finding perhaps that Bitcoin could be an answer to some of those questions. I mean, we have to keep in mind that GDP for that country, 23% of it is made up of overseas remittances. So this is not an economic powerhouse. I think as well the fact that they are lacking in support from international institutions such as the World Bank and the IMF with this experiment will also be a hindrance rather than any real support for it. So, we wish them well and wish them the best of luck with it, but I don't think it's an indication necessarily of the future of cryptocurrency.
Caroline, we know that there are huge volatility issues with cryptocurrencies. The price of Bitcoin plunged 17% overnight. How will it ever be classified or viewed as a stable store of value like the US dollar or gold, particularly when it operates in such an opaque environment?
Well, I think there's a few points to that question. And firstly, I think that the global push for regulation of Bitcoin and cryptocurrency will help with some of that. But also, this is a very young asset class. This is a little over a decade old. So there's a lot of maturing still to go within this space. For Bitcoin, the anticipation at industry level is that the inclusion of large-scale institutional investors will help flatten some of this volatility that has certainly been a feature of the investment cycle so far for Bitcoin. But also, likewise, keep in mind the volatility aspect that we speak about. For some cryptocurrency investors, they view that as a feature rather than a bug. So it certainly hasn't been adversely impacting some of those investor decisions.
Back home, Afterpay is calling on the government to actively consider what framework and optimal environment for Australian dollar-backed stablecoin should look like. How exactly would that work, and how sensible is it an idea to introduce cryptocurrencies into the buy now, pay later arena?
Well, certainly, we're delighted to see Afterpay join the rest of the cryptocurrency industry in this push for regulation. It's something that we've been pushing for a long time here in Australia in particular. So we're very pleased to see Afterpay joining the fray in that sense. Stablecoins are somewhat different to cryptocurrencies in that they're asset-backed, and invariably it would be a fiat currency or a basket of assets that sit behind it. So they are quite different as opposed to your Bitcoin or your Ethereum, where it's a very different prospect. So I think that there's going to be a place for stablecoins, absolutely. I think no more than if you look at central bank digital currencies, I think there's a place alongside those as well. The issue is going to be for central banks worldwide, not just here in Australia, is how to properly build and regulate and kind of operate a payment system and an economy that has such exposure.
Well, just on central banks, the RBA is warming to the creation of a wholesale market's digital version of the Aussie dollar to facilitate the movement of assets on blockchain. How far off do you think that is, and what are the benefits of that?
Well, I think for us here in Australia, we only need to look as far as one of our nearest neighbours in Singapore. They've been exploring this kind of activity for a couple of years at this stage and certainly have got a solution developed or in development. So I think for us here in Australia and for the RBA more importantly, there are the technical solutions that are there that we can look to harness, as well as obviously a very active and willing industry to help support that. In terms of benefits, the speed of cross-border settlement being aided by the wholesale use of a CBDC is not to be dismissed. And I think it certainly would be pertinent for us in order to ensure our place within financial services internationally and also, in terms of dealing with some of our overseas partners.
So if it's a question of relevance, what do we risk as a nation by not developing our traditional financial models to accommodate for cryptos?
Well, exactly that. We risk irrelevance. I think that it's absolutely vital for our future economy, that we properly explore with a very open mind exactly what digital assets can do for our country. Again, knowing that financial services, I think, is over 20% of our GDP, we can't kind of blithely wait for these advancements to come lapping at our shores. We need to take a step forward and go at it ourselves. And certainly within the industry, those technical capabilities exist here in Australia. The industry is very willing to come forward and cooperate and work with the government on this in a true spirit of collaboration, which I think is probably the very spirit of Australian innovation.
Caroline Bowler, thanks so much for talking to us.
Thank you very much.